You're watching today's video technical update presented by FX Times. It is Monday, March 22nd, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex market. This week started with the euro dollar and pound dollar testing support of their recent consolidation zones. So far, the markets are showing an attempt to keep them from a continuing decline, at least in the short term. The dollar Canadian dollar is showing a pullback, so we can now assess whether the market wants to continue its recent decline or whether it wants to get back into consolidation mode or sideways action. Finally, the euro pound is signaling a continuation decline in the short term. This video is being produced at about 3:15 p.m. Eastern Time, near the end of the US session. Starting with the euro-dollar pair, we have seen this pair in the last couple of weeks in this sort of rounded bottom that failed to complete. So the market didn't break above our power line here at 1.3850, and the market finished off a double top and also continued to bottom in the intermediate time frame. Now in the short term, we had last week this decline was very strong, but right now this week started with support holding at 1.3450. So the market looks like, at least in the short term, to have a bullish attempt. Now looking at the daily, we see that this is basically testing our consolidation support, and a break below 1.3450 would be indicative of a continuing decline, which targets here at 1.3031. Okay, looking at the 4-hour time frame, we see that the market looks like it's ready for a little bit of a correction after this decline last week. In the 1-hour time frame, we see that this correction so far has retraced 23.6%, is at the 50 moving average, and the stochastic shows a crossover and almost a roll back into a decline. So there looks like there is some momentum coming, and we'll see in the Asian European session if there's a decline. Now if that decline in the European session breaks below 1.3450, then that's a signal for a bearish signal. However, there's I suspect another attempt in the correction, but at the 1.36 level there should be some significant resistance in this near-term, short-term outlook. So allow for some further correction, even though the market does show reversal already, because if there is reversal, we still have to wait for 1.3450 to be broken to continue our intermediate term bearish outlook, which is the decline towards 1.31. So right now, monitor the market as it tests support, and as the market attempts any bullish action at the support, and see how that action tops off. Probably here, 38.2% is a very. If it reverses there, then the bearish forces are still very strong in place. So that's it for the euro dollar. The pound dollar pair is in a similar situation as the euro dollar pair, as it showed continuation decline in the intermediate term last week. You see this correction looked like it was going to be over when the market cracked this rising support, but we do see this second slower rising support hold up today. So there's some there might be a pullback. That's again like looking at the 1-hour time frame. Just like the euro dollar, we're going to look for topping action. Here, topping action might come up to 1.52, which is the bottom, this power line right here. So that if there's topping action there, the decline might be a continuation decline, which in the intermediate time frame, you see here, comes down to this cluster of Fibonacci levels, which is 1.4445. Okay. Here's the dollar Canadian dollar pair, which has recently broken the 1.02 level. So that was breakdown of this consolidation area, which signal a possible further bearish outlook towards the parity level. And here, as I zoom out of the daily time frame, we see this parity level is where this previous consolidation zone is. So there's some support there. But even now, the market looks like there's some support. At least this is a correction in the short term. Now, looking at 4-hour, we see that we are testing the 1.02 level now to see if it can act as resistance. So if the market does top off here at 1.02 and continues with some bearish indication, then that parity scenario, the probability of the parity scenario increases. However, if the market breaks above 1.02 and actually sets a low above 1.02, then that probability will dwindle. And when you look back at the daily time frame, this would basically be a clear out action of the previous support, which is actually strength formation. So if the market does stay above 1.02 in the next few days, then there might be a strong attempt to test our resistance area, which has been declining. So I would say, because we are still in consolidation mode, a projection in the intermediate term, short and intermediate term, would still go to at most 1.06 area here. Okay, so look for confirmation for your bullish rally, but also anticipate topping action and further bearish continuation. Here's a quick review of the euro dollar, which has been in this long-term congestion pattern. Before that, it was in a bullish mode. So back to the present, the market has attempted to test this declining trend line, but could not break it. There's a correction. Now this could be, as far as wave count, 1, 2, 3, so 4, and another rally could follow to test our declining trend line in this triangle. So now, with that outlook in mind, looking at the 4-hour time frame, we see that here this declining action broke our previous support here, and now we have a pullback which failed to break above 0.9050. So this looks like a confirmation of our decline. So that there might be a swing projection here towards 0.8840, and again, that 0.8840 is this important power line that used to be resistance here, used to be support here. Okay, so I would suggest stalking the current decline towards 0.8840. If there is support there, then we may have, again, this terminal wave 5 to test out a declining trend line. If it breaks, however, we may have a decline towards our our support here, which has been rising. So you see this congestion mode should be ending soon as nears the apex, but I would say even if it ends, you have to watch for these support and resistance for a sideways market. You see here the market has stayed sideways. The top here at 0.91 has maintained itself here. So that, in other words, this current high here is actually matching this high. So the market may start turning into sideways action. So look out for that even after a break of this congestion pattern. Alright, so in the short term, look for this decline to bottom off here, and if there is a rally, look for the market to test this declining trend line, and then make a decision whether, if the market breaks above, then we may have a further test of this 0.94 area in the short term. That will be it for today. Visit FX Times for your daily technical and fundamental analysis updates, as well as educational live events. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you good trading.